Jyotivardhan Jaipuria, the founder and managing director of Valentis Advisors, is now joining in to talk more on the markets. Jyotivardhan, good morning. Thank you for joining in. Firstly, wish you a very happy new year, the first conversation of 2026. But we are talking of Gokuldas exports, right? All of these tariff-related names, they went up, they recovered from the initial losses on hopes that a deal will happen sooner or later. But now this uncertainty is beginning to bite them again and does not look like quarter three is looking any promising either.
Yeah, so like you rightly said, there were a lot of hopes that the deal is getting done. If you see the India side also, they kept saying, okay, we are almost there, almost there. But yesterday, that whole thing that, we'll again punish India, China, Brazil because they import oil from Russia and, tariffs could go up to 500%. That probably means that there's a setback to the deal again. It doesn't seem like it's happening in a hurry. So all the stocks which are going on hope, because the fact is they are doing badly. When the numbers come out, they're not going to look very encouraging. So, unless you get this deal really happening, you'll probably keep going through this up and down phase.
Right. On metals, what is your thought? Do you think, this decline is worth purchasing because this unwinding is just a once a year sort of event?
Yeah, so see, the metal pack will do well over the next 12, 18 months. And we know it's very, very volatile, so it will have its volatility. But it's a space where, investors will make money. It's a space where that much money is not got made. Also, what you see over there is, like, for example, India's put safeguard duty just now on the HR coils. So to that extent, there'll be that whole bit of protectionism which comes in, which helps the domestic producers also. So it's something which, would be positive for this year.
This correction we've seen month after month since September. What is your best and worst case scenario? The domestic inflows, of course, have been supportive while FIIs have continued to take money out. But do you expect some sort of a trend reversal over the medium term?
Yes, so I think, this year will be better than last year. Of course, last year also we ended up with a decent market for the large caps. But if you look at the broader markets, they didn't do really well. And, the small cap index was down nearly 10% last year. So I think this year, 2-3 things will help us. One is, we'll see earnings recovery. So we had 6 quarters of single digit earnings growth. I think, the December quarter will be better. We'll probably get close to double digit earnings growth. And as we move forward, we'll probably see double digit earning growth for the next 3-4 quarters. So that's one thing which will support the market. The second is, I think FIIs will sell less or probably become buyers also at some point. So this sounds like a very controversial call now because everybody's, FIIs has been selling so much. But I think, there are 3 reasons for this. So one is, if you look at on a very absolute basis, India has done very badly last year. We underperformed the MSCI emerging market by nearly 25%. Second is FIIs are very, very underweight India. And third is, from a relative valuation point of view, we are now trading at averages. If you look at where we are versus the MSCI index, the average has been like roughly 50-55% premium, and that's where we are now. So I think FIIs will start to sell less probably. They'll increase their weight on India, and that probably helps the market over this year.
And finally, the IT sector, names like TCS dragging the broader indices, the benchmark down, Infosys down as well. Earnings start next week. In that pack, it's been a bit of an underperformer last year. Do you see a meaningful recovery?
So, I don't see a meaningful recovery in IT. IT's got like a longer-term structural issue, which is, the whole AI is going to mean that, growth in IT names is going to be weak for the next 3 years, 4 years. So it's, probably more tactical buying because it's done badly. There'll be periods where the market's weakish and you tend to buy some of the underperformers start to do well. But like for us, we are still, underweight the sector, and we don't really see ourselves becoming overweight the sector this year also.
Right. Among all the stocks which are underperforming right now, the one which is bucking that trend is Balaji Mines. They've gotten some favorable government regulation or some sort of subsidy for their Solapur unit, which accounts for nearly a third of the capex that they've earmarked for that plant. 750 crores and 250 crores comes back to them, and the street is cheering that. I ask you this specifically, largely because the last time we spoke, you said some of the companies that, from the chemical space are the ones which you're eyeing. And I drew up a list Vinati, Naveen Fluorine, SRF, all of them came to my mind. So I just thought, I'd get your view on that once again, Jyoti.
Yeah, so the chemicals, the whole thing was, they've done badly over the last few years. In general, the chemicals pack is still not very cheap. And the second problem they face is like China competition. But there are some sectors where, things have bottomed out. There are some very stock specific things which will, there's a new plant coming up, or, there's some export benefits happening. So, for example, we own one company which supplies to the US, where US has put an anti-dumping duty on China. So because of the anti-dumping duty on China, there's these guys are able to sell their product, which they earlier could not do. So, it's like, looking at some stock specific things like that, where, sectors underperform quite a bit, the stock has underperformed quite a bit, and there's some stock specific thing coming up which will help earning growth over the next 2 years. So, that is our general thought on chemical. Pharma is the other segment where, it's done badly for quite a long time. And probably some things change. The stocks are not looking very expensive. So, there's not been a duty on US generics. So to that extent, there's probably a lot of pessimism in the price. And it's something, again, which we are looking at now.
And Jyoti, thank you so much for sparing time and joining us today with your views on the markets and, of course, the themes that are moving around in today's session. Thank you so much for joining in together.